What is up, Grunts? Welcome to our market recap. So, over the NY sessions, we saw that equities pretty much fell earlier throughout the session, then pretty much recovered afterwards. I just want us to jump right into these headlines. That was the most important of why we saw the actual reactions for the dollar. So, I put this BlackRock headline because BlackRock is pretty much the most they control the most assets and probably all over the world. So CEO Flynn, his comments holds a little weight to it, but it's good to get their opinions on what they expect from the markets, right? Because these are actual billionaire investors and even the government go for these people for advice. So it's good to see that, inflation remains, he says sticky. So inflation still remains high and he still expects two more Fed rate hikes, right? So it's pretty much the same of what a lot of other Fed speakers somewhat are thinking as well. But it's cool, like, to pay attention to those kind of headlines just so that you can see if everybody is saying the same story. So don't just completely ignore it when you see them. Just try to see if you agree with the comments or not. Like, does it make sense? And to me, I feel like that is pretty much broad of what a lot of investors is most likely thinking as well. So the U.S. debt limit, that hearing is still, I believe, is still going on and is live. I'm not going to watch it, but just so that we know, again, just to be aware, if they're going to continue to make a deal that is more optimism for the markets, and that's pretty much what we're looking for. And we see that Thursday and Friday, we see that leader McCollum says they're looking to finish the bill either today or tomorrow or Friday. So if they don't, but just because he gave a date, a deadline, right? If we see any negativity within those 2 days, that could cause uncertainty, because now it is reaching a it is being stretched, right? So we have to be cautious when it comes to the markets, because now we're having these debt ceiling talks. We're having NFP on Friday. We're having Fed speakers being hawkish and dovish. You get what I'm saying? We have an economic data. We have an economic data that one is job data, the other is the health of the economy. So we're getting this pretty much this ping pong reaction of everything all in one. So when I know I had a few people ask, like, oh, what happened? Why is I enter buys on something, then I see a pullback? And that is the reason why, right? So if we get strong labor data. So let me just go. Oh, I didn't put it in. Sorry. Yeah, I'll put it in later. So I would just put it here. So if we have strong labor data, and then we have data that is about the growth of the economy, that's where you're going to get the ping pong reaction, especially if you're trading equities or gold. Because if we have strong labor data, that signals higher inflation, that will signal a stronger Fed. But then if we have PMI data that drops below, like like a really, it just drops, right? PMI falling is always negative. Then that shows pretty much recession fears. So that's what I'm saying with the ping pong reaction of data could really mess up these pairs. And then on top of that, you're adding political situations that is literally at the peak where they have to make a decision. It's a lot of stuff that is going on. All right. And we just can't, come to these markets expecting, oh, this data point has to give this reaction when there's multiple things happening at once. All right. So that's why I like these market updates, because it pretty much clears the whole slate so that we could just get an overview of everything that is happening. So now looking at these headlines from the Federal Reserve. So it was a Fed whisperer that says that the FOMC is likely to hold interest rates steady in June. So that's the next meeting is going to be in June. And everything else that we had today pretty much confirmed that statement, right? Where we see right here the Fed futures rate 72% chance of a pause in June. So there you see June hike odds has plunged to 32% from 70%. So we're seeing the markets is now expecting a pause for the June meeting. And then we have a Fed beg, whatever his name is, employment increased at a slower pace. So that's still higher employment. We know that that's not what the Federal Reserve want. So it's just like process of elimination that you got to see, like, if this headline is this Fed speaker talking about a hawk, is he's being hawkish, increasing rates, or is this statement is more dovish, right? So then once you could get an idea of like hawkish or dovish, that's usually the direction the markets will go. And then you add how the data can confirm that reaction. Okay. So the Fed doesn't have to hike at every meeting. So this is a switch of tones that we're getting from Fed speakers. You remember who those that was with us last year? The direction was pretty easy. All the Fed speakers was talking about increasing rates, fighting inflation, that they need to continue to increase rates, so that we had a clear direction when it came to yields and for the dollar. Now we're seeing that shift where one side you have Fed speakers that want to be hawkish, and then on the other side, yeah, large Russian missile attack on Kenya. So those escalations still playing out. And then on the other side, we have Fed speakers that is dovish. All right, so that's what we're dealing with. We're along that ping pong reaction of the markets. All right, so just want to clear that that's pretty much how the markets went that day. And then now we just have to just see what other events that we're going to have that is going to give us those confirms of what the Feds and what the markets is expecting to happen for June's meeting. Okay, because since now we see that the markets is expecting a pause, so knowing Friday is NFP, and if the markets is expecting a pause, we want to see economic data confirm that. And if we could see that the economic data confirms what they're saying, we're going to see possible more downside in the dollar. All right, because if we see that the labor markets, the unemployment rate is rising, we see that lesser people are working, job data is dropping, then that just confirms more reasons for the Federal Reserve not to hike rates aggressively. The markets is going to start anticipating more pause of rates for the rest of the year and possible rate cuts at the end of the year. And that's every reason we could get a drop in the dollar. All right. But now, but the consequence of, let me just get the DXY chart. But the consequences of what the Feds are doing with raising rates leads to a weakened economy. And the dollar is still a safe haven asset. So what we have coming up tomorrow is ISM manufacturing PMI data. So, and we also have jobless claims, right? So if we see, this is what we have to look out for, because at 8:30 we could have jobless claims and we could see that more people are being unemployed. That's going to confirm the weakness of the dollar. But then at 10, right, like, so let's just blah, 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 blah. Let me put that out right quick. Let me get this other chart, because I really want us to understand, like, because it's really about trying to comprehend what the markets is doing so that you just don't get lost by just being one-sided the whole session, because this is where you're going to get these type of reactions. Like you're going to get this bullish move from the data, then you're going to get Fed comments that's going to give this for the dollar, right? So you're going to get this bullish move, and then you're going to get that move. you know uh you're going to get this move, and then you're going to get that move. And where else? Yeah, equities, right? So you're going to get this upside move, then you're going to get that drop. So we're going to have to dissect data just so that we don't get confused. And always in these kind of situations, scalps is the best opportunity if we're trading that event. So say we're trading this event at 8:30 US jobless claims, right? And then we see that more people are losing their jobs. That's going to be dollar downside. That's possibly going to be equity upside. And what can happen is right when that data come out, if it's a surprise, you're going to see that move react to it right away. That's going to be the opportunity. It's not going to be the opportunity to hold that position throughout the whole entire day. That's pretty much what a lot of people tend to do, and that's really how they mess up on their positions. So especially if we're trading something like USD JPY, and then say that more people lose their jobs, we see that spike to the downside. That is the reaction of the move that we want to see at that current event. All right. And then we could follow the yields just to get a broader view of how the markets are expecting where rates is going to go. So if we see that the yields is dropping from that data, that confirms dollar downside, possible equity upside. All right. And then after that, we're going to have another data point, which is ISM manufacturing PMI. Now that data point is about the health of the economy. So it's about the growth of the economy. So that has nothing to do with an inflation indicator. So this one can be, if we see a drop in manufacturing, the markets could take that as recession fears. And that's where it gets tricky for a lot of traders, because we're looking for sells on the US dollar, because we're following what the feds are going to do from a labor standpoint. But then investors could buy the dollar because they're looking at it as a recession or a fear indicator, and that's where you start seeing those pullbacks, those moves that's where the markets continue to consolidate and give you those pullbacks. Because at one hand, you have the weakness of the dollar from what the Fed perspective, and then the other hand, you have a stronger dollar because of a recession fear perspective. All right. And then that will cause equities to consolidate. That will probably cause gold to go up and then retract. That's the ping pong reactions that we're getting when it comes to those events. And that's not even including the debt ceiling talks, and then that's not even including the Fed speakers. Because then if you have 3 or 4 Fed speakers coming out that day, you probably have one that's hawkish, then you see another one that's dovish, and it really depends on what they say. So the markets they're very in tune to see if they're very blunt about pausing rates or hiking rates. So what we had today was Fed speakers talking about a pause, but is really about trying to dissect what they say. Because around here he was saying, where was it? I know he says that I would like to, it would be a skip, not a pause. A pause says you would hold there for a while. So pausing rates is like, we're going to pause in June, then we're going to pause the next. He just pretty much saying we're probably going to leave the rates where it is for that June meeting. And that's kind of like hinting that after the June meeting, we're going to possibly do another 25 basis point. But the markets right now is taking that as a pause. It really don't matter what they say. And then Jefferson pretty much said the same thing. And that's the reasons why we've been seeing the drop in the yields. We get in that drop in that yields pretty much the whole entire day. And then we're not having anything else that is showing us that they need to hike rates. All right. So that's what we're going to be looking for. So the overall right now, as of today, what we see so far is that the Feds for the June meeting, they're most likely going to start pausing rates. So that's how we're going to look at it. Let me just go here. Yeah, so June 14th is the next rate decision. We could see that these odds pretty much probably went up for a pause. So what we're going to look for now is we want to see a continuation for a bearish bias. So if we see that any inflation indicators are still being lower or in control, um, Fed speakers, it is looking like they're still shifting their bias to being dovish. We don't see any talks on an increase of the terminal rate. We're going to be looking for that drop in the dollar until we have something that proves to us otherwise. And another thing is that we have Friday. Friday is going to be a big indicator on if we're going to continue to see a drop in the dollar or if we're not. Because if we see that the job data is more people are still employed, we see that NFP is rising, we still see a strong economy, strong labor market, markets is going to start pricing in a 25 basis point, and that's going to be our opportunity to start looking for a bullish dollar. All right, because now the markets is already expecting a pause. So the surprise is going to be if we start seeing a strong labor market. If we see a weaker labor market, we're just going to continue that. There ain't going to be any real reasons to buy the dollar unless we have recession fears or any like any risk off markets where the dollar is going to react as a safe haven. So that means PMI data. If that drops big, and if PMI data drops, we see the dollar is pushing bullish, then we know that it's probably temporary, but they're buying the dollar as a safe haven. But for a fundamental fundamental perspective on the Federal Reserve, what they're going to do is dovish. All right. So hopefully that does help and clear some things out. So it's just really important to understand direction, right? So when we are dissecting these data points, you just want to be able to say like, okay, when this data comes out at 8:30, I expect this to happen. Okay, when this Fed speaker speaks, okay, what is he saying? Is he going along with what that data was? So if it seems like we have labor markets is dropping, and then we have a Fed speaker that comes out and he's just confirming that the labor markets is dropping, he's confirming that we don't need to be as aggressive, that's just continuations of the moves of a weaker dollar. But if we have labor market dropping, then we have a Fed speaker saying that inflation still is too high, then we have those two situations that is contradicting it, and that's what's causing the indecision in the markets. Because like the markets isn't such black and white at this current state, so that's what's making it a little tricky for certain traders, is making it tricky for a lot of people. So your entries when you enter trades, it's going to be really important on your timing, where you enter, where you're getting out. It's going to be very important, because you don't want to be the type to say that we have data, it's just an example, and it's looking like this was the move from the data, and then you failed to take this as a scalp, you fail to break even, and then we have another data point, or we have a dovish Fed, which we had, and then you're getting this whole entire move canceled on you. You know what I'm saying? So a lot of it is understanding everything that is happening and getting a bias, because as soon as we had this headline come out in the charts over the session, where you're seeing that the US Fed futures is pricing in a pause, right away you're like, oh shit, this is what the markets is expecting, this is going to be the direction of the day. And then usually all these Fed speakers is confirming that bias. All right, so today was that day where everything was just one-sided for a weaker dollar, and that's why we saw this drop. And then now we're looking at we could look at NAS as okay. We're still seeing NAS pretty is still consolidating. We're seeing price action is moving sideways. We're not trending. All right. But now that we're seeing that there's a pause, that is potential upside for equities. That should be good for equities. But then if we have data dropping, let me just put that in there because I know a lot of people are visual. So far, y'all with me, right?
Yeah.
Yeah, man. I know not people don't really learn this shit anywhere else. Let me just put it here. All right, great. So this is the problem. Job openings. There's a lot more job openings, but then we had a drop in Chicago PMI. So this drop in PMI, especially PMI being below 50, it is very negative for an economy, right? And then we have tomorrow we're gonna have the actual ISM PMI data, so that could cause a drop in equity markets knowing that PMI data is dropping. So that's where you see the consolidation. That's where you see that those data points is going against each other, and that's where it makes it an issue. We just double check. Yeah, we just had JPY PMI data also, and that came out below the previous. All right, so and it wasn't a surprise and nothing, but I just throwing that out there just in case. But this is why we see this kind of reaction for equities. So it's really hard to like determine, okay, what is the markets waiting for us to see a breakout, like an impulsive move in the equity markets, in either direction. What is the markets really waiting for? So is it going to be a surprise print for NFP? Is it going to be the rate decision? Like it has to be a reason. We're not going to really, like, even if it's the debt ceiling situation, if everything comes, if there's no deal, what if even if it is a deal, are we going to see this sort of price action? When are we going to see that kind of reaction to data? That's the question that we all want to know. But we just have to prep for it. So as long as we have a direction, we could keep trying, right? So say that if ISM PMI data comes out negative, at least we could take advantage of those sells and hopefully expect that would cause fears in the markets, like recession fears, that could cause a drop in the equity markets for our just for our equity pairs. But then if you're trading the dollar, a drop in ISM could cause the dollar to increase as a safe haven. All right. But if we're looking for the sells in the dollar, you don't have to take the buys on the dollar because usually that move will be temporary. But it'd be different if we had a hawkish Fed and then we had ISM that drops. That's going to give us those continuations to the upside if we're trading the dollar. But, just looking at equities right here, that is black and white. I would be more patient when it comes to trading these equity pairs, just because of the stuff that we have, and the markets is most likely anticipating ISM data and non-farm payroll, NFP. We're going to be waiting for that data. Most likely that's what the markets is waiting for direction. So we have to wait for that too. So I know a few traders want to trade equities over London session. Like it really looks good. You seeing this break above, you want to take the buys, and then it goes up a few pips, and then bam, it goes right back into the range. That happens to a lot of people. You have to maintain discipline and just wait until we get this breakout of structure, because if we get a breakout and it's for a reason, then most likely we could take advantage of those opportunities. But if you're just trying to trade at just because it's London session, you're guessing. And we're not here, we're trying not to guess. All right. So no more guessing games, especially that is the last day at the end of the month. The first week is that Friday for that NFP. We already see that today. We have a dovish Fed. Now we're just looking to see if the data coming up for, are we going to get more recession fears? And then on Friday, are we going to have additional reasons for that data to prove that we're going to have a dovish Fed? And if we do, dovish Fed, I would expect equity buys. But what could stop those equity buys is if recession fears, a hard landing, if that comes into the picture, we're just going to see more sideways price action. It may be looking like it's coming down, but it's really hard to trade it. So you have to be in a scalper's bias. What I would probably recommend in these kind of price action moves, we identify a support, you identify a resistance. And this is what a lot of technical traders are just doing. They're just selling at support. I mean, they're just selling at resistance and they're buying at support. That's what they're doing. Do you want to do it? It's really up to you. But yeah, so London will be waiting period, or in London is no data, no reasons. Usually we're just waiting for the markets to give us a reason, because Friday is NFP. So a lot of the focus is going to be towards that, so we have to focus on it too, So it's like, people watch a boxing match, right? And we know that the main event is at 10 and you're there at 8. Some people probably ain't going to watch it until the main event. It's the same shit. Like, you don't want to be trading majority of the day that pair, and the markets ain't going to give you a direction because the big market participants is waiting for that Friday, and that's where the volatility is going to be. So you just trade in the markets where there's just no volatility. And a lot of times when people are trading at support and resistance, a lot of times it'll be bullshit, because look at the whipsaws. You get a sell, you get the price action to go right back. So it's just best to just wait until we get a direction. But if you do, scalps is the best opportunity. I wouldn't try to marry any trade in either direction, because look what we're getting with price action. Let me see. Yeah, so we had weaker yields. So those weaker yields was supposed to give strength for the JPY currency, and that's probably why we saw GJ consolidate. Does pound have strength right now? Yeah, pound's been extremely strong throughout the day. Like, pretty much this whole the whole week we've been seeing a pretty strong pound. So like, that's the only thing, is really nothing related to it, but we're just seeing that pound strength really just kicking in, and I like it. So that just gives me better opportunities, because if we saw that we got that weaker dollar, that should still give us possibilities for more upside in pairs like GU, and possibly more upside in GJ. But the problem with GJ is that the yen reacts to the yields. So if we have weaker yields, that is normally a stronger yen. And this is why we're seeing these consolidations and these JPY pairs, because it's like you're trading a stronger currency against another stronger currency, because it's reacting to what the yields is doing. So we get a stronger yen because of that. So that's just one thing I would definitely focus on. Yeah, like euro pound is nice. Yeah, like, because you want to trade a stronger currency against a weaker currency. So sometimes, like, yeah, usually when there's reasons behind it, euro pound is definitely a really great pair to trade, because it's really one sided. Once we have reasons for like a stronger pound, it would normally go in that direction. All right. But we could just see that pound is back in that range. And this is what we was going over the previous London session, was when we see price go right back above structure, now we could just cancel out the fact that there are sellers in the markets, right? Because if we wanted this to be a break and a retest to the downside, this price action would have never happened. Price would have still been coming down here. So now we could just identify that, we have the stronger pound. The sellers are out in the market. We're back up in the range. So now we're just going to be looking for these continuations. As long as this support of 173.0 holds, we're going to be looking for possible more upside. And I know at 2 a.m. at 2 we have housing price data. We have 4:30. It's not important economic data, but we have the UK mortgage, um, the Bank of England consumer credit. Yeah, and at 4:30, sorry, yeah, is that Tuesday the first? Yeah. All right, so at 4:30 we're gonna have the UK PMI data. I just didn't put it in. I just missed it. But yeah, we're gonna have the UK PMI data at 4:30. So that could be a good reason for upside in the pound. But the fact we've been seeing a stronger pound play out this whole time, and like what I always been saying before in the past, if we could still get those reasons, price action to confirm more upside, I don't mind taking the risk of buys. And if we get the extra confirm of that manufacturing PMI data for the UK to come out positive, we can see before London session, it tends to happen a lot that you see that breakout above structure and we start seeing, the pound continue to push bullish. But what we need is just a weaker yen, and hopefully we get a risk on market that confirms weaker safe haven pairs, and we can look to take this trade to the upside, but we're going to have those reasons. So looking at the UK PMI data, it is expected, let me just yeah, so it's expected to decline. The forecast is looking to be lower than expected. So if we get that drop, then we're just gonna trade that accordingly. But if we see that it comes out higher, we continue to see a stronger pound. We just want to see that break above structure. So we can see that we have this order block right here on the 30-minute. Just want to make this a little more clear. As we can see, price action is here. As long as we're not coming back down to the support, breaking below structure, it's possible that we could possibly see some more upside, from 0.400. We could take it to at least that 173.6. If that data confirms that it comes out higher, that would be a surprise to the markets. And then we could look at as it breaks above the structure, as we see to the left. Most likely, we break above this high, is a higher chance we're going to continue to 174. And then what could help with that confirm is if we got PMI data coming out higher than expected, especially if we already have a few headlines in the past that Bank of England speakers are expecting growth to pick up in the UK economy. So this would be a good sign if we see that growth continue. But if we see that the data comes out lower than expected, we're just going to be looking for the opposite. As price breaks back below this support, hopefully we have a reason for it, for that weakness, and anything below that 173, we could take those initial scalp sells to the downside. All right. And those would be the two opportunities I would be looking for on GJ later in the day. If we could break above here, and if you want to take that buy, we got to hold above structure. I would say stops below the order block would be ideal. If we can confirm a risk off market, weaker yen, stronger pound, breaks above structure, you're going to want to place the stop loss below the order block because that's where the trade would be invalid. But just know that we're entering probably hours before the data. But if we get price action going our favor, it's really nothing wrong with taking that. Just have to manage your risks just in case you take a loss. But just know that 430, most likely at 430, we will get a direction that we could take advantage of. If data comes out the same, then that just be a dud session, and then we just have to wait until NY and probably wait till Friday. All right. But that's the opportunities I'll be looking for GJ. And then later on, we're gonna have just inflation data for eurozone. So what I'm expecting for those that trade euro, The higher the inflation, most likely we're going to get a stronger euro currency. We're going to get some ECB members coming in talking about that they need to fight inflation. So that's how I'm looking at it for Eurozone. Higher inflation, stronger euro. We see inflation remains the same, or if it declines, we get a miss, then I will expect a weaker euro. And for those, and like what uh yeah, what you were saying about euro pound, that would be a good trade to take advantage of, because then we'll have a reason for a weaker currency than a reason for a stronger currency. All right. Depending on what inflation data does. Because like PMI is important, but inflation is what's going to be the bigger picture for that euro. And let me just look at euro pound. Yeah, those cells. Yeah, we see the cells is playing out, and this is just due to a stronger pound. So I wouldn't want to do anything here at this current moment, but you want to take advantage of this. If we see that inflation comes out higher, we get PMI data is negative for the pound, then we'll take this pair to the upside as it breaks above. But I'll look at this over the London session as well, just to see that where we're at.
Hey, and for sells, you would look just to sell to 84, or where would you stop selling just to?
Yeah, because like look at this support where we are.
Yeah.
Yeah, we're really touching like a key area of support. So it really just depends on like what happens with that data. Um the fact that we're approaching this key area, we're gonna need inflation to drop for euro. So that decreases the odds of a hawkish ECB. We'll probably need to see weaker PMI data on top of that as well. And then we need a stronger pound. Like we're gonna need that PMI data for the pound to come out stronger as well. And then I could see this support being broken. But other than that, like if we get mixed data or we don't get those confirms, it'll be very hard to see that this support gets broken without those all of those confirms happening. But this is a key area that we're retesting here. So hopefully we can consolidate here, like throughout the time, and then see what happens with the data. And if we break below that support, most likely it's going to be for a weaker euro and a stronger pound. But yeah, like it's really hard to determine what to do at that point since we're so low. Like what I'm hoping for is that we just consolidate. I want to see price action, like this happen, down here. We could just consolidate, because then it'll be easier to get a direction once the data comes out. Yeah, then also for CAD traders, we also going to have CAD in manufacturing. It's going to be the same thing. Like USD CAD could be one. Like if we get weaker CAD, stronger dollar. Like it's really dependent, but we're just gonna want to take advantage of what's the easiest. All right. So we went over GJ. I know we had AUD data. Yeah, we have retail sales for AUD coming at 930. And then again, we have the China, just for now, like just so we can see. So coming up, we're going to have Australia's retail sales and China's manufacturing PMI. So remember what happened yesterday when China data came out negative. That's where, we had that drop, over that Asian session when China's PMI data came out extremely negative, right? So this one, China is expecting PMI data to come out at a 49.5, and Australia's retail sales month to month, they're looking for it to come out lower. So Australia itself, yesterday's inflation data did come out higher, but it did react to that negative China print. So we could see what the markets is really paying attention to. So if we see Australia retail sales decline, and then we see that China manufacturing PMI data decline, we're most likely going to see another day of a drop in AUD, and then we probably see another drop in NZD, if that China data comes out negative. because China is very influenced in Australia and New Zealand. But if we see that the Australia data comes out, the retail sales come out higher, China data comes out higher, then most likely we'll probably see AUD support that. And then we could possibly look for some upside on AUD as we start breaking above structure. All right. So we're going to want to see breaks above structure first. Don't try to take the trades at random. We still need the price action to go in our favor. I still like the fact of a hawkish Australia central bank. I know Lowe spoke yesterday. He was pretty hawkish. Inflation was rising. So if we see that the China data comes out higher, AUD, I want to see if we get breaks above these highs. And this could possibly be that swing trade opportunity we could take advantage of leading towards the rate decision, because most likely they're going to raise rates. So that would be a good surprise to the upside. But China data is heavily impacted with this. So that's what I would just focus on for AUD. And then also we'll be looking at AUD USD as well, since the dollar is being very pressured to the downside. And as we can see here, we took advantage of these sells over London heading towards New York. But then just like GJ, we recovered the whole entire move. So now the sellers looks like it's out of the markets, as long as we could stay above this support. And then once we get those reasons for a stronger AUD, anything above 65.100 with those confirms, I would like to take advantage of the upside of the AUD USD pair as well. So it really just depends on what happens with China. If the data comes out higher, then most likely we'll see a strong NZD, a stronger AUD. I would like to take AUD instead of NZD, because the AUD currency, we had their governor Lowe was hawkish. Inflation is still a problem. Yesterday, we had highest CPI print for the monthly. So we just need to, just remember that for those continuations, because now if we get a stronger AUD, that would be our opportunity to take advantage for a shift of this structure that we're having here. And then once we could break above, we could confirm that shift. And then most likely we could take advantage of some upside with a risk on market. But all right, I'm done here. I don't want to keep ranting. Hopefully this was good for everybody. I know it was a lot. Rewatch it if anything. Remember to take notes. And see ya for London and New York session. If anybody have any questions, I'll leave it here for about, just in case people got to type. Thanks, Vanya. All right, and this here, and see y'all later. Yeah, no problem, Mark.